Welcome to Commercial Property Club, our podcast, the show where we dive deep into how physicians, pharmacists, dentists, as well as nurses can build long-term wealth through apartment investments. I'm your host today, Ola Ibiwoye. We're going to talk about one of the most critical factors when it comes to investing in apartments, your multifamily investments. Practically, that's what we're going to be talking about today. So I want you to sit back, relax, as we go and dive deep into this particular chapter topic, which is about multifamily. Just like I said, choosing the right market for your apartment investments. It's very pivotal, so I can't wait to talk about this with you today. How to determine a good market for apartment investments. So see you. I'll allow you to go grab your coffee, your notebooks, as well as your pen, so that you can take notes today, okay? All right, I'll be right back. Thank you once again for joining me here at Commercial Property Club podcast. Today we're diving deep into the ins and outs of a wonderful topic that I think is very critical when it comes to getting involved in apartment investments. For busy professionals out there, physicians, dentists, pharmacists, and nurses, and as well as all the savvy investors out there, you really have to listen to today's part chapter title, which is how to determine a good market when it comes to apartment investments. So the question you want to ask yourself is, why does market matters before you get into investing into apartments? Let's talk about why choosing the right market is very crucial. Now, a strong market does increase your chances of high occupancy rate, the growth of your rent, then also too the appreciation of your investment. If you find yourself in the wrong market, you can eventually end up with large amount of vacancy, declining rents, difficulty in selling the property eventually. So understanding market fundamentals helps you make an informed decision. Now, data-driven decisions rather than emotional ones. That's what I'm talking about. I'm talking about the fact that, you don't just make decisions based on emotion. Oh, I like the look of this property. No, that would not cut it at all. You'll have to go into data and pull up some numbers and make sure you make the right decision. What are the key factors to analyze in a market that will make you want to say this is a good market, this is not a good market? So you should be looking to numbers like evaluating your population growth, I'm talking about your demography right now. You should also look for markets with steady growth in population. That's very important. You want a market in which population is steadily growing over the periods, at least the periods that you're going to be there, mostly the periods of growth in terms of population in location within a span of a number of years. So then also you want to pay attention to the median age and the workforce trends in that area. Are they, so that you know what you're catering for in terms of your leases? Is this a particular market in which you have a lot of young professionals? Is it catered towards family moving in, job growth, economic stability based on the demography? Then strong job markets lead also to high rent. That's another aspect you you also want to look at a strong job market in terms of, I'm talking about the growth, the addition of jobs to this market is very important. A market that has a high trend, in other words, the addition of jobs into that market ultimately would lead to high rental demands. So you want to research employment rates, you want to research major employers in that particular market, the industry diversification that would ultimately accumulate to people moving to that location. So market driven by a single industry can be very risky. Think about it, the impact of the recession or industrial shifts. It does affect supply and demand for rental housing. So you want to watch out for that also too. So then also to analyzing vacancy rates. Lower vacancy rates would generate it does mean that there are higher demands. You want to analyze that also too. Then also check the construction trend in that location. Too much new supply could actually lead to lower rents, while too little supply may indicate that there are untapped potential in that market. Then also too, you want to look at the rent trends and affordability also too, or looking at historical or projected rent growth in that area. Consider affordability compared to local incomes, which is a high rent to income ratio can lead to tenant turnover. So you want to watch out for that too. Another aspect of what you need to take into consideration is the businesses and investor activity in that area. Are there other investors in that particular market? Developers putting money into that area? Are businesses expanding? Is there more business which means that, you know, more businesses just means that more jobs are going into that market, so there will be higher demands for your rentals. So that's also constitute to you to the importance of that market. Then also too, a major aspect you want to look at also is the local or the state landlord laws. Very important. Some markets are more landlord friendly than others. When you also research eviction laws in that area, you want to research that, making sure that, you know, the eviction laws are quite favorable for your investment. Then also to rental control policies, also to the tax implication in that particular location would obviously help you determine if that particular location or market is worth going into as an investor. Where do you find market data? Now that you know what to look for because of the information I've given earlier on, how do you find these particular informations? One of the places you can also look for all this data is U.S. Census Bureau for population and demographic trends. Then also too, when it comes to employment statistics, you want to look into the Bureau of Labor Statistics for employment and wage data. Then your local economic development website for your business growth, because that's where you get the information when it comes to the growth of business in that locality, what's coming in there, what's been established over the years. You could pull up information even years prior to the time that you intend to go into those market location. And also too, online platforms like your CoStar, Yardi Matrix, and Zillow particularly good for your rents and vacancy trends. Then also to networking with your local investors and brokers will get These are the people that are on grounds that, will have more information that can give you more insight as to what's going on. I'm talking about investors and brokers that are on ground in that particular market that you're considering going into. Let's talk about some top markets to consider in the year 2025, because every market on a yearly basis have some shift in terms of population, in terms of job growth. So you could say that some markets possibly can be the number one market this year or 2 years in a row, and may not necessarily be the market that would top the list when it comes to like 3 years down the road. So let's talk about some strong markets this year 2025. You have for so many years Sunbelt cities like Austin, Phoenix, also to places in Florida like the likes of your Tampa, and this is due to the fact that, just like I talked about, growth in population. In your market aspect of things in the Midwest, you have places like Columbus and Indianapolis. Those are good areas also, so those are good market which offer steady cash flow and affordability also too. Secondary markets like Raleigh and Charlotte and Nashville, where job growth is driving upwards also too. Those are great markets also too. The Dallas area is a great market that also too, that is really booming. Over the last numbers of years, they were emerging markets, and they're still thriving. So that's what you want to look out for when it comes to determining the markets that you're going into. Going forward, what are the actionable patterns or takeaway from what we just talked about? Always look for population growth, job stability, your rental demands before investing in a market. Very important. Then understand your local regulations, just like I talked about. The landlord laws would obviously impact your investment. If they're favorably predisposed, they're going to help your investment. If they're on the side of the tenants, they're against landlords, it's going to affect your investment. They would impact your profitability. That's all I'm saying. And also too, when it comes to leverage data, make sure you leverage data source and local networks to validate your assumptions or maybe your findings. Make sure you get the right information before you move forward into any particular market that you're intending to invest in. To wrap up today's episode, I hope this gives you a solid framework for determining the right markets for your next apartment investment. If you find this episode valuable, please subscribe and leave a review. If it has helped you in some form of way, my content has helped you, share with somebody out there that is trying to build wealth through real estate. As a physician, as a pharmacist, as a nurse, also as a dentist. Don't forget, Commercial Property Club podcast is your go-to place when it comes to informed decision in your real estate investment, apartment investment. I'm your host today. My name is Ola Ibiwoye. You have any questions, you want me to cover a particular topic, reach out to me on my social media, inbox me on Facebook, YouTube, or send me an email in ola.i@commercialpropertyclub.net. That's ola.i@commercialpropertyclub.net. Just send me an email. Until next time, keep making smart investment choices, building your financial future. Okay? Thank you very much. This is Ola Ibiwoye of Commercial Property Club Podcast. Thank you.